Good morning. You are watching a live daily market outlook for Thursday, 10th of May 2012. The main fear about with investors about the markets remains Greece as the now the socialists, the winners of the recent elections during the last weekend, are making the last attempt to create the government. From overnight releases, China's trade surplus came in much better than expected. Figure 18.4 billion compared to 10 billion surplus is shown on the April trade balance data, with the risk of a fresh demand downturn after the recent data were released, with shares being pressured overnight by Chinese data, as well as fear of further deepening of European crisis. Comments from Bank of France officials saying that their forecast sees the world economy stagnating in the second quarter of 2012. And of course, today's main release, the Bank of England's rate decision, with inflation worry Bank of England possibly to halt the money printing press. Starting with Greece, the Greek socialist leader Evangelos Venizelos will make its last-ditch attempt to form government today and avoid a new election after voters rejected the bailout deal and pushed Greece into a political crisis. The chances are so far slim, and Venizelos can clinch a deal after both the conservatives and the leftists tried and failed to cobble together a coalition in 3 days of talks following elections on Sunday, when voters spurned the big parties and their austerity policies. The political deadlock prompted European threats to eject Greece from the euro, while impatient governments withheld part of the latest tranche of rescue funds to be paid to Greece today. New elections in 3 to 4 weeks now loom in Athens due to run out of cash in June, needs to impose fresh measures in exchange for funds. Of course, the possible failure of this and the more dangerous continuation of rejecting the bailout and austerity measures might trigger deeper crisis and a domino reaction within the European Union, as we still have more cash-strapped nations such as Spain and Italy, as well as Ireland and Portugal, and this could be quite a big danger for Eurozone unless some solutions will be found in the short period of time. We'll be closely watching movements in Greece and developments. And of course, all the updates you can find in Windsor Brokers website or through the trading platform. As said, from Bank of England that is due to release today. Let's first just have a quick look at Australian data that were released during the night, and surprisingly, growth in the employment in April, pushing the jobless rate to its lowest in a year. Just reminder, employment changed by 15,500 compared to the negative forecast of minus 4.8 thousand. And the forecast for the unemployment rate was 5.3% and came at 4.9%. That pushed the jobless rate to its lowest in a year, and is an encouraging outcome that helped the Australian dollar to jump higher after the data were released, and now for now trimmed the expectations for deeper interest rate cuts. The as said data show the 15 0.5 thousand jobs were created in April, following a solid rise in 37,600 jobs in March. As said, the jobless rate dropped to 4.9%. Important thing is that it's making pressure off the Bank of Australia to cut the rates at its June meeting, and since last meeting there was pretty good retail sales report and good business conditions survey with decent building approvals, and at the top of everything comes the quite positive unemployment rate that dropped, and the employment data that jumped, keeping the further rate cuts now on hold for the Bank of Australia. From today's calendar, we're going to take a brief look at more of the technical stuff. I don't want to spend too much time in talking. So as said, the Australian employment change 15.5 thousand versus minus 4.8. Unemployment rate dropped to 4.9% compared to 5.3% forecast. Chinese trade balance jumped to 18.4 billion surplus compared to 10 billion surplus forecast. And Japanese economy watcher sentiment had dropped from 51.8 March release to 50.9 today, with 52.5 more optimistic forecast. Still to come, a batch of data from UK manufacturing production for March is expected to increase on a monthly basis by 0.5% compared to negative release of February at minus 1%, while the industrial production is expected to decrease by 0.2% on a monthly basis compared to 0.4% increase in the month of March. Bank of England rate decision at 0.5%, rates unchanged. More interesting will be comments from the Governor King, whether more cash will be poured into the economy in order to help the currently dipping back into the recession UK economy. And from countries across the ocean, weekly jobless claims from United States due at 12:30 GMT are expected to slightly increase by 371,000 compared to 365,000 of the previous week. US trade gap for March is forecasted to widen today to minus 49.8 billion US dollars compared to the gap of minus 46 billion prices. US import prices at the same time for April minus 0.1% is today's forecast for the monthly release compared to more healthy 1.3% of the previous month release. Canadian trade balance is forecasted to show a further increase of the trade surplus to 0.7 billion Canadian dollars compared to 0.3 billion of the month of February. New home price sales are Canadian NHPI monthly for March is expected at 0.2% compared to 0.3 of the previous month. More significant is speech of Fed Chairman Ben Bernanke due at 13:30 GMT. That was all a brief look at the calendar. We're going to now take a more detailed look at the markets and see the movements in major currencies and commodities in the past 24 hours. Starting with euro, that is now consolidating, undergoing brief consolidation after hitting a fresh low at 129.10 after the pair cracked its last barrier of strong support band at 130 and 129.50. That also marks Fibonacci 61.8% of rally from 126.22 yearly low to 134.85 yearly high. A break below this level, which marks the multi-month range floor, and now threatens for further weakness of the pair and possible test of as the pair dipped to 129.10, the 129.00 is the next target as psychological support, and more significant 128.75 and 128.54. January 2012 and January 2011 low at 128.75 and 128.57, 29th of December 2011 low. That will be our next targets on the downside. Technical outlook on the daily chart still remains negative and keeps the downside in focus. On the lower time frames, a negative tone, but overextended studies persist on the 4-hour chart, with the current corrective action bouncing off its initial ceiling at 129.70, attempting to break higher with initial barrier at 129.80, the dynamic resistance of 55 days moving average, and more significant will be the 130.00 on the 4-hour chart, the 20 days exponential moving average, and the round figure resistance. That for now should cap the upside attempts as conditions in technical indicators are still in the negative territory, and basically only regain of 130.60 zone, the 8th of May high, and the 130.80 last week's closing levels would improve the current outlook. Basically would avert immediate downside risk and allow for a stronger correction. On the upside, the key barrier at 131.00 and 131.80, the double top of 3rd and 4th of April, break regain of which is required to refocus 132.82 previous high. Basically, the negative structure doesn't see much potential for now for the euro's recovery, as the more negative news are still coming from Eurozone, keeping the strong pressure on the single currency, and the likely scenario would be the further extension lower. From technical side, also negative indicators, negative structure on the lower and the higher, larger time frames are still keeping the downside vulnerable for further losses. A break below, as said, 129 and 128.75.57 may open way towards more significant levels on the downside, with 126.22 yearly low posted on 13th of January to possibly come in focus in case of loss of our initial downside targets. Cable recovered quickly after yesterday's spike lower to 160.65. That basically dented the strong support zone at 160.60, 160.80. That marks the higher platform of 23rd, 24th of April, as well as a previous high at 160.61 of 2nd of April. But good support was found here, just ahead of 50% retracement of the move from 158.17 to 163.00. And the quick recovery followed the levels regaining previous levels where the pair traded before the dip at 161.30.50 zone. A break above 161.55 and the more significant 161.68 peak of 8th of April is required to confirm the current recovery and the open way for a possible extension towards more significant barrier at 162.00, where the recent recovery attempt was rejected, and also the previous highs of 4th of April, pardon, of 4th of April and I do apologize, 4th of May and the 3rd of May, and basically break above this zone would be signaling a higher low at 160.65 and possible attack at 163.00, with the 162.50 zone coming as an interim resistance. Still negative tone seen on the 4-hour chart, with the hourly studies now improving and regaining fresh momentum. But as said, we need to see the break above 161.70, 162.00 in order to confirm. On the daily chart, the positive tone and the uptrend of 152.33 yearly low remains still intact. However, the studies are losing traction, and the loss of momentum sees risk of further reversal. Positive from the other side, positive thing is attempt to create the golden cross of 90 and 200 days moving average, as bounce of 160.65 needs to clear 161.68, 162.00 in order to confirm the creation of golden cross. That will be quite supportive for the pair, and they will signal an extension of the larger uptrend from yearly low at 152.33. Clearance of 163.00 opens 163.88 Fibonacci barrier and 160.00 around the figure resistance. So on the downside, risk is still seen of further weakness with the 160.65 break, of which also the 50% retracement of recent up move from 158.17 to 163.00 would risk extension down to 160.00 figure support and 61.8% Fibonacci retracement. The dollar yen is in the near term corrective action after cracking its support zone at 79.6352 with a brief break lower, finding support at just below this level at 79.42. Currently, the corrective action is still seen limited as 55 days exponential moving average caps the upside for now at 79.80, and holding below this level would signal further extension lower. More significant barriers are seen at 80.60 previous highs. Of course, first we need to see the break above 80.00 as previous high and the round figure resistance, with more significant barrier at 80.60 previous peaks of 2nd and the 3rd of May 2012, as well as bear trend line, main bear trend line drawn of 84.08 high, with the break here to avert immediate downside risk and allow for a stronger recovery. As daily outlook remains firmly bearish, and the recent break below 90 days moving average that currently stands at 79.95 still sees the potential for further extension lower, with the clear break below 79.6040 support band to open 79.13 as Fibonacci 61.8% and 79.00 as a round figure support. On the downside, 78.41 will come on a break at currently 200 days moving average, and the previous range top at around the 78.30 zone. The dollar Swiss is in its steady uptrend of 1.5 week low at 90.41, low of 1st of May 2012, with the final break above 92.50, 92.69 previous high of 7th of May, extending gains so far to test our initial resistance at 93.00. That was seen so far as the pair reverses a lower loss of 92.69. Now I signal a stronger correction, but still a corrective way, as studies are positive, but overextended conditions of all studies on the 4-hour chart see potential of further reversal. Ideally, reversal should the ground should be found at around the 92.30 40 zone, where it's 23.6 retracement and the 20 days exponential moving average, in order to maintain the immediate bullish structure and open way for further extension higher. But further reversal down towards 92 zone, where it's previous low of 8th of April, as well as 38.2% Fibonacci retracement, would not be that harmful for the pair and would still keep the bulls intact for a fresh extension. Break above 93.00 to open more significant barrier at 93.30 14th and 15th of March peaks, as well as 61.8% Fibonacci retracement of the down move from a yearly peak at 95.93. That bottomed at 89.30 yearly low posted at the end of February. Positive tone now on the daily chart is seen supportive for the pair, and the upside remains favored for now. As said, only loss of 92.00 would delay immediate bulls and allow for a deeper reversal, while break below the main bull trend line of 89.30 at 90.80 and low at 90.41 would turn the focus completely lower and look for a test of 90.00 and 89.80, where is currently the 200 days moving average. A quick look of the crude oil. That was the biggest loser of the last year, as the current price action shows an attempt of consolidating after heavy losses from $106.41 per barrel on the 1st of May. That dipped, posted a fresh low yesterday at 95.18. Negative tone continues to dominate on all time frames. However, some corrective action is seen as overextended conditions on the 1 and 4 hour chart see potential of corrective action. So far, correction was limited by 98 zone, and the negative tone that persists on the daily chart, as well as a brief break below 200 days moving average, keeps the downside more vulnerable of further losses, with clear break below 95.18, the recent low, to open next significant point, and the static support at 92.70, low of 16th of December 2011. On the upside, I would say significant barrier and psychological barrier at $100 per barrel, and the previous low at 100.67, low of 10th of April. The regain of these levels is required to prevent the oil price of further losses and to keep downside protected. Otherwise, possible bounce higher would be seen just as corrective action, and before leaving a lower top and the extension lower. As also fundamental news, especially regarding current deepening of the crisis from both sides of ocean and worldwide, are increasing fears of lowering demand for the energies in the world. That is actually the main driver of the oil price in the past couple of weeks. The yellow metal also is in the near-term recovery mode after a fresh and sharp fall of 1640-50 zone, dipped to as low as 1579. This was the low of yesterday, 1579.50, after losing more significant supports at 1623, 1612, and 1600 as round figure and psychological support. Negative tone dominates on the daily chart, and still sees the downside favored with the current corrective action seen on overextended studies on the 4-hour chart, with initial barrier seen at 1600 and 1608, where is also the 20 days exponential moving average, while a regain of previous double bottom at 1623-24 zone, as well as 1626 of low 4th of May, would provide some relief. This is also close to 50% retracement of the latest down move, would provide relief, and only break above 1650, I would say, would signal a return to strength for possible test of 1670 and 1680 resistance zone. As said, the negative tone is still keeping the downside in focus, with our main target on the downside. First 1542, 61.8% Fibonacci retracement of the longer term ascent from 1308 low of 2011 to 1920, 2011 high, and also historical high of gold. And basically loss of this strong support would allow for a stronger correction of the over 10 years stronger rally of yellow metal that rallied from approximately $300 per ounce and peaked at close to $2,000 per ounce without any significant correction. This is so far the biggest corrective action, and basically break below 1522.32 double bottom would be signal of deeper correction. Current situation in the world economies and the customers, investors running out of gold as used to be the main safe haven instrument might be good signal of further weakness of the yellow metal. And a quick look on the crosses. Aussie dollar bounced significantly after overnight's data were released, after dipping to 10019, just ahead of a parity level that was aiming for on its descent from 104.73 peak of 27th of April. Overextended studies on 4-hour chart see potential of a stronger corrective action as initially the pair reached 101.24, the 23.66% Fibonacci retracement, as well as 20 days exponential moving average with more significant barriers at 102, 102.20 zone marking 38.2% retracement, a previous high of 7th of May, as well as 55 days exponential moving average, and the only regain of this level would allow for a stronger correction as the pair remains in the stronger downtrend, and especially after a loss of recent consolidation floor at 102.25 and break below 200 days moving average turns the outlook, larger outlook for Aussie dollar more negative with the strong downtrend of 108.55 peak of 2012 posted on 29th of February, keeping the downside in focus. Next static supports are at 98.80 zone, 98.80, 98.60 lows of 19th and 15th of February. And finally, a quick look at dollar Canada that is also in the specific situation, a bounce of 0.98 zone, 27th of April low is now testing the very significant, very strong barrier at 100.50 that marks the multi-month range top, as well as 200 days moving average, and close to this is 38.2% Fibonacci retracement of the broader descent from 105.21 peak of 25th of November 2011 to 97.98 low of 2012 posted on 27th of April. We need to see clear break here in order to signal a stronger recovery and open way towards 101 as initial round figure resistance, and 101.60 50% retracement. Currently the pullback on overextended conditions briefly broke below the parity level. Actually is testing now parity level also the 23.6 retracement of the latest 198.00 to 100.61 rally, with the next static support at 99.85 7th of May peak, and the 99.60 38.2% retracement, where ideally a reversal should occur in order to maintain the short-term bullish structure and keep it intact for a possible attempt higher. Failure to clear 100.50 would signal further range, while loss of 98.00 is to open way for a stronger for further losses as part of extension of the broader downtrend of 105.21. That was all for today. Thank you for your attention and visiting our live sessions. All those that connected later and missed any part, you can find the recorded version of this session in YouTube. Windsor Brokers page is called Windsor Brokers Forex. Along with this, you can find a number of technical analysis updates. We are back tomorrow morning at the same time at 7:00 GMT. I wish you a very nice day and successful trading. Good luck.